The situation just escalated. It got worse, way worse than anyone was predicting. The US economy has just delivered its weakest job numbers since the depths of the pandemic, sending shockwaves through traditional markets. But for us, in the crypto space, this isn't just a ripple effect. It's a tidal wave building on the horizon, one that could redefine the entire market structure. The August report was a bombshell. A mere 22,000 jobs were added, a staggering miss from the expected 150,000. To pour salt on the wound, June's numbers were revised deep into negative territory. This isn't just a slowdown, it's a screeching halt. For the first time since the pandemic lockdowns, the US economy has officially shed jobs. This confirms the fears that economists have been whispering about for months. The recession isn't coming, it's knocking at the door. This kind of data forces the Federal Reserve's hand, potentially halting rate hikes and signaling a pivot. And when the Fed pivots, the entire financial landscape shifts, creating immense volatility and opportunity. If you hold Bitcoin, Ethereum, Solana, or XRP, this is not background noise. This is the catalyst for the next major reset in this bull market. For Bitcoin, this is the ultimate test of the digital gold thesis. Will it act as a safe haven, or will it get dragged down with risk assets? For Ethereum, a slowing economy could mean less network congestion and lower fees, potentially creating a prime accumulation opportunity. High-throughput chains like Solana and assets like XRP tied to global payment systems face their own unique pressures and opportunities. This volatility is designed to shake you out. And if you are not prepared with a clear strategy, you risk not just losses, but missing the kind of asymmetric opportunity that only comes once a cycle, the move of a lifetime. Economists expected weakness, but this bad, the consensus was shattered. Nobody saw it coming with this much force. And right as this data hits, the mainstream media is scrambling, putting crypto bulls like Michael Saylor and Tom Lee in the spotlight. Saylor is telling institutions this is the final call to protect their treasuries with Bitcoin, while Wall Street strategists reevaluate every projection. This is the moment where fortunes are made or lost. The question is, which side will you be on? This Monday morning, CNBC will broadcast what could be the most pivotal crypto conversation of the year, featuring a roundtable of Wall Street titans and crypto pioneers. The timing isn't a coincidence. The entire financial world is holding its breath for one thing: impending rate cuts from the Federal Reserve. And historically, the playbook is clear. When the Fed slashes interest rates, it makes money cheaper, forcing investors out of safe havens and into risk-on assets for higher returns. Every major rate cut cycle has supercharged assets like crypto. We're talking about potential explosive growth for Bitcoin, Ethereum, and even high beta altcoins like Solana and XRP. Yes, the stock market and Bitcoin are consolidating right now, trading in a tight sideways range. But don't mistake this for weakness. This is the quiet accumulation phase where smart money builds their positions, coiling the spring tighter and tighter. This is the calm before the storm. Fundstrat's Tom Lee, one of Wall Street's most respected bulls, calls it the start of a brand new bull market. And while some bears remain, the institutional consensus is shifting. This time, the big money agrees with Lee, and they're preparing to make their move. Tom Lee explains the institutional mindset perfectly. These massive funds managing trillions don't officially call it a bull market until two things happen. First, a decisive break to new all-time highs. For them, this is the ultimate green light, proof that all prior resistance is gone and the path forward is clear. Second, they need clear dovish signals from the Fed and signs of economic recovery. And guess what? We have already seen the breakout in equities satisfying the first condition. Now, with inflation cooling, we are on the verge of Fed cuts. Both criteria are aligning. The stage is set for the next great crypto bull run. Let's look at the broader economic picture because the signals are undeniable. The ISM index, a key measure of US economic activity, is on the verge of crossing the pivotal 50-point mark for the first time in nearly 3 years. A reading above 50 signifies a definitive shift from contraction to true expansion, a major green light for investors. Add to this the explosive force of artificial intelligence acting as a massive technological tailwind and falling mortgage rates beginning to thaw the housing market. When you combine these powerful forces, institutional capital managers don't just see a few green lights, they see a superhighway opening up for growth assets. And where will a significant portion of that capital flow? To the asset class with the highest potential for growth, crypto. For years, institutional money sat on the sidelines. But with the validation of spot ETFs, crypto is now a strategic allocation. The floodgates for a tidal wave of liquidity are opening. This is why the recent market dip, what we call the bull market reset, isn't a reason to panic. It's a classic, healthy consolidation that shakes out over-leveraged traders and builds a stronger foundation. Far from being bad news, this reset is the market coiling the spring, confirming that the truly explosive phase of the bull run is about to begin. Now let's zoom in on Bitcoin. According to Bitwise's chief investment officer, the price you see today is artificially suppressed. He argues that years of regulatory roadblocks have kept Bitcoin far below its true fundamental value. Based on its core properties, a digitally scarce, finite supply, and its ever-growing network security, his models show Bitcoin's fair value isn't 60 or 70,000. He believes it should already be trading at $200,000, and the tailwinds just keep coming. Think about it. The SEC just dropped its investigation into Ethereum, a monumental de-risking event for the entire ecosystem. Congress is making tangible progress on a stablecoin bill, laying the foundation for trillions in tokenized assets. Even the White House is hosting crypto summits, signaling a shift from hostility to engagement. Every pillar of the bear case is crumbling. All of these are bullish developments, yet Bitcoin remains capped. That is what makes it a coiled spring. Release the pressure and Bitcoin rockets. On top of that, ETFs are driving constant demand. MicroStrategy just bought more Bitcoin. Companies are piling in. Countries may be next. Demand is structural, supply is fixed. The game theory is in motion. It is not a matter of if, it is when. While Bitcoin grabs headlines, Ethereum is quietly being accumulated by whales and institutions. In just 48 hours, nearly $1 billion worth of ETH was scooped up. Tom Lee still projects Ethereum could hit 10,000 by 2025, but he adds something even more interesting. Most of crypto's gains come in the fourth quarter. Historically, Q4 delivers the breakout, so if ETH is up 35% this year, the next 200% could arrive in the coming months. And with Ethereum at the center of AI, DeFi, and stablecoins, it is not just speculation, it is infrastructure. Wall Street insiders know this, which is why they are buying quietly while retail is distracted. Let's shift to altcoins. Solana is positioning for a breakout moment. A Solana staking firm just secured a NASDAQ listing. A $1 billion treasury backed by Multicoin, Galaxy, and Jump is being created to buy Solana. This is not hype. This is real institutional money moving into altcoins. And then there is XRP, still ignored by mainstream media, still underappreciated, yet building adoption in payments and remittances. When the spotlight shifts, XRP could be one of the biggest surprises of this cycle. This is why we call it a bull market reset. Institutions are no longer looking only at Bitcoin. They are setting up across the entire crypto ecosystem. Here's the big picture. Investors are starting with 1% allocations to Bitcoin. Then they ladder up to 3%, 5%, even more. If just 1 to 5% of the $100 trillion institutional investment pool moves into Bitcoin, that's $1.5 trillion in buying pressure. Combine that with Ethereum accumulation and Solana treasuries, and you have the makings of the biggest crypto bull market in history. But here's the key. This is not hype. It is structural. It is already happening behind the scenes. The only question is when the public wakes up. So yes, the job market looks weak. Yes, the headlines look scary, but that is exactly why the Fed will cut. That is why institutions will deploy capital. And that is why crypto is set for its biggest breakout yet. Bitcoin at 200,000, Ethereum at 10,000, Solana with billion-dollar backing, XRP waiting in the shadows. The bull market reset is not the end. It is the beginning. The question is simple. Are you positioned before the next leg begins? Because the next few months will change everything.